April CPI report, otherwise known as inflation, just came out. What does it mean for mortgage interest rates today, tomorrow, and into the future? In this video, I'm going to dig in and tell you what I think. All right, Matt the Mortgage Guy, licensed in 47 states, powered by You Mortgage, greatmortgagebroker.com. It's how you connect me and my team. You don't care about any of that. You just want to talk about April's CPI report, inflation, and what was in the report, how that affected mortgage interest rates, and I think more importantly, how it's expected to affect mortgage interest rates in the future. So let's go over some of the numbers, and then I'll tell you what the numbers mean, and we'll dig in to some things that I think you can expect from the Fed, from inflation numbers, and then mortgage interest rates. Here we go. This number was released on May 10th. These are the inflation numbers, consumer price index for April of 2023. The headline number, month over month, 0.37%. Year over year, down to 4.9 from 5%. Not a significant downturn, but still 10 straight months of inflation coming down. It's headed in the right direction. The core inflation reading, 0.41% month over month, 5.5% year over year, down from 5.6%. Down below, it's really interesting to look at the different components of what goes into the CPI report and how those changed. Shelter costs are 43% of this core inflation number. And what that tells me, and it should tell and inform you, is that if shelter costs are coming down, hint, hint, they are, rent and, owner's equivalent rent, then you can expect inflation to continue to come down. And I say they're coming down because we know the data, it lags. And so these numbers that have been in inflation reports over the last few months are not necessarily showing what we're seeing on a month by month basis, right? With rents decreasing, with owner's equivalent rent decreasing, right? So, and I'll talk about owner's equivalent rent, which is the funniest metric of all time. Wait until I explain that to you. You're going to be mind blown. So down to 8.1% from 8.2% is this overall, shelter costs. Rent, month over month, 0.6%. That just remained steady at 8.8% on a year over year basis. Owner's equivalent rent, up to 8.1% from 8%. 0.5% month over month. You guys want to know what owner's equivalent rent, how that's measured? Well, first, I'll tell you what owner's equivalent rent is. It's the amount of rent that would have to be paid in order to substitute a currently owned house as a rental property. So guess what the Bureau of Labor Statistics does? When I heard this, I was mind blown. Generally, the way they get this number, this is official, right? They do a survey asking homeowners, if someone were to rent your home today, how much do you think it would rent for monthly, unfurnished, and without utilities? And that's what they go with. Now, I can tell you with absolute certainty that not everybody is following housing, is following rental prices, has a good pulse on what this number is going to be. So they're probably going to guess, right? And it might even be influenced by what's on the television. Rents are up. Housing is doing this, right? And so not a very good metric, in my humble opinion, but who am I, right? Just little old Matt the Mortgage Guy. Nonetheless, tis what it is. Used cars. This is an important thing to think about. Month over month, it's affected this report, 4.4% increase cost of used cars. So this is going into our inflation report. Year over year, used car prices are down. But month over month, if you annualize 4.4% a month, that's a 50% increase year over year. This was a small blip, just like gas and oil prices had a blip because of a supply and demand issue in April, which had an effect on CPI. Used cars is the same thing. This won't continue, right? So future reports, this will come out and we'll continue to see favorable inflation data going forward. I think I had one more. See, shelter, it talks about shelter cresting. Shout out to my friends at MBS Highway. All these charts are from Barry Habib and MBS Highway folks. So thanks for letting me borrow those. I don't know if I was going to show the cresting one, but monthly CPI readings, like here's April, May, and June of 22, where we had high, month-on-month readings. 0.6 is 7.2% annualized. And so when we get May and June, no doubt, when we look at year-over-year numbers, right? Because it's going to look at the readings this May versus where we were last May, it's gonna continue to downtrend. Okay, so all this stuff out of the way, you just want to know, how the heck does this affect mortgage interest rates? I got you, right? Today, I'll probably start, I'll start here. 34% basis point to the better. Green means mortgage rates lower. A lot of people contacted me and said, inflation numbers in, rates are down, party. Most rate sheets I looked at saw about 20 basis points better. Meaning, if it cost you $8,000 to get a 6.5% on an investment property, 20 basis points is an $800 difference. That $8,000 cost went down to $7,200. Not life-changing, right? On most rate sheets, if you were going to get a rate for 6.25, maybe you now have a 6 1/8. If you were looking at 6.5, maybe now you're looking at 6.375. Not a humongous change. And I think this is a cool chart to look at. Here we are today, right? May 10th. This already is projecting May 11th, right? And rates are, roughly speaking, if you look at a national average, 30-year fixed rate, primary residence, we'll use Mortgage News Daily number, 6.57, 5/10/2023. And so that's where we're at today. I was looking at this handy dandy chart just to see kind of, historically where we're at, what it would take to get us back here February 2nd. This was the last time we saw, on a national average, the 30-year fixed rate under 6%. We can go to Mortgage News Daily again and go back to this little just the tip below 6%, right there. February 2nd, 2023. So to get back there, we need 100.9, 101 point. We need about 100 basis points, and we're back. We're back, right? Future looking is the next conversation, right? Like, what's going to happen at the next Fed meeting and the one after it? I think, and this is a lot of smart people I've talked to that are thinking the same thing, with what we're seeing in inflation data, the Fed should be relatively convinced the worst is behind us. We're on our way. No more rate hikes. Most likely needed, right? Rate hikes are going to be paused. In my humble opinion, a lot of other folks' humble opinion, rates should be fairly, stable and downtrending. Now, not downtrending from 6.5 to 5.5 in a month. Downtrending, over time, 3-6 months, slowly but surely get us under 6% by the end of 2023. Another thing to consider, which I didn't pull up here, is that the spread between the 10-year Treasury currently at 3.43, and that 30-year fixed rate mortgage, 6.57, I think it was, is a full 3%, 300 basis points in financial speak. That spread's usually 180 to 200 basis points. So if we see less volatility, if we're more certain of what's going to happen in the future, that spread is going to come back down to where it traditionally stays at closer to 2%, not 3%. That's going to have downward pressure on mortgage interest rates. It's not going to happen overnight, but don't be surprised at a downward trend in mortgage interest rates. Anybody who's talking 8 or 9% mortgage rates still has lost their mind, and just turn that stuff off. Downward trending, relatively stable, below 6% in the next 6 months. That's the call. As always, you can buy your interest rate down to 5.99 today. You can do all kinds of stuff with structuring a deal with a 2-1 buy down, whatever you want to do. But generally speaking, 30-year fixed rate mortgage, that's where we're at. Owner occupied investment property is different. If you want to get pre-approved, if you want to talk about your specific conversation, no matter where you're at in the country, me and my team are more than happy to help. Go to greatmortgagebroker.com and let us know where you're at, what you're looking to do. We'll see how we can help. Thanks for watching. Check out more videos here, and here, I believe.